What's up, everybody? I hope you're doing well. So it is that time of year again, the time we all look forward to, tax season. I know, almost had you there. And lots of you naturally ask me all kinds of questions about finances, accounting, taxes, etc. as they pertain to private practice. And honestly, I'm no expert when it comes to private practice finances. So I'm so thrilled that for today's video, we have a tax expert coming on for an interview, answering all of your burning questions. A few weeks ago, I put a poll on Instagram inviting you to share your burning questions related to accounting and taxes as they pertain to private practice. And today, I'm getting to pose all of your burning questions to a tax expert, not just any tax expert, but the founder of Heard Bookkeeping and Tax, which specializes in doing accounting and taxes for mental health professionals specifically. Yes, today I have the amazing privilege of interviewing Andrew Riesen, who is a CPA, and as I said, he works specifically with folks in the therapy field. So he knows all the nuanced answers to the questions that folks ask him over and over again who are in our profession. So without further ado, we're gonna hop straight into the interview because there were a lot of questions that I asked Andrew, and I just wanna hear all of his answers right away. So let's get into it. Andrew, I'm so excited to have you on. This feels like it's been a long time coming because we've been in communication. I was trying to remember back, it's been more than a year for sure, but it's probably like a year and a half that we've been talking about Heard and all the awesome things that you have to offer. So it's really wonderful that I finally get to have you on and answer basically all of the tax questions and accounting questions that everyone asks all the time. So this is like a moment. Thank you so much for having us, and during the busy tax season.
I am particularly, and the team at Heard is very grateful for the opportunity to jump in and come talk about all things taxes. I think particularly for folks who are early on in private practice, this is a really overwhelming and scary time. And we've seen it with a lot of the clients that we're working with. And so just really grateful for the opportunity to come in and talk through and hopefully bring light and some education around some of these topics as well. So thanks so much.
Thank you. So many of these questions, I don't know what the answers are. Sometimes people think I know the answers to all the things, and I really don't. So I'm so glad you're here because you're going to answer a bunch of questions that I have too. And what I ended up doing was I surveyed my audience through, the formal survey format of Instagram stories, and people submitted their questions, and I kind of put them loosely into categories because I noticed a lot of the same questions popping up over and over again. And so what we might do is kind of hit each of the categories and answer one or two questions from each of those if you are willing to do that. Before we hop into it, do you want to say anything about yourself? Any fun facts? You're the expert, obviously, but what else should people know about you?
Yeah, fun facts. I am a grade A accounting nerd. I've been doing accounting things for an extended period of time. I started my career working for a boutique wealth management firm in Portland, Oregon, where we worked with predominantly high net worth medical professionals, many of which were independent physicians. And then I spent time at PwC on the technical accounting side, helping small businesses, and got lucky enough to have an opportunity to help PwC build new accounting software products for small and growing businesses. And that led to the intersection of my passion for mental health due to my own experiences with anxiety and depression. And also, because I happen to be married to a private practice therapist and have many friends that also happen to be private practice therapists. So grateful to be here and, excited to, illuminate some of these scary topics as it relates to private practice accounting with some of the skills that I have.
Yeah, scary topics for sure. At least that's how it feels to us non-tax accounting people. But that's really wonderful. And I'm so grateful that you've allowed your own journey to shape you helping therapists too. So that's really wonderful. Well, should we hop straight into the questions? Because I want to glean all your wisdom. So, one category of question is like when I propose the question, like, what are your tax and accounting questions? People are just asking, like, where do I even start? Like, I don't even know what questions to ask. For example, one question is, what do you need in place before launching a private practice? Try to tackle that big one if you can.
Ooh. What do I need in place before I start a private practice? there are a number of different things to think about before starting a private practice. But specifically as it relates to managing your accounting or the financial side of your private practice, a couple big things that I typically recommend is setting up a formal business entity. And so depending on the state that you might be in, if you're in California, this is probably a professional corporation because licensed professionals cannot be an LLC. Or more specifically, maybe taking a step back and acknowledging if you are looking to set up a new business entity, probably discussing that with a lawyer prior to getting that set up. And then once you have that new business entity set up, I would recommend thinking about getting an EIN. You're going to get an EIN for that specific business entity. And then once you have that EIN, the big piece would be being able to separate church and state, or in this case, separate your business and personal bank accounts. A big thing that will decrease headaches down the line and support you as you set up the accounting and financial infrastructure for your practice is having that separation. And when you have that separation, you're able to have a clear understanding at all times of, what is the income that's coming into my business bank account? Am I able to set aside a certain amount for my quarterly taxes? And you don't have that crossover, which oftentimes leads to a misunderstanding of how much have I made? I need to scramble at the year end to get all of these receipts and all of this information together to hand that over to the accountant. And typically that'll save you a lot of time. So I would say setting up a formal business entity, getting an EIN for your practice, and setting up business bank accounts are going to be a surefire way to set you up for success. And if you're setting up a new business entity, I might explore setting up a service of process to where you can separate your business address from your personal address. As a therapist, oftentimes having that separation just from a privacy perspective, as noted by my partner and many of our friends, is often an effective strategy.
Totally. I get asked that question a lot, and I don't think people even ask this here, but I'm glad you touched on that, especially in the age of working from home, offering teletherapy. And we still send mail out. We still, our address of where we work is out there in different places. So it is so important to have a separate address as well. Well, I'm so glad you touched on those things. And each of those can feel scary if you don't know what they are, the EIN and the entity and the checking account, the business account. But they're not that scary, folks. So I'll link to a couple of resources below too on how to get each of those set up. It's actually pretty simple. So such good tips though. I think so many people start out without setting any of that up. And then later, like you said, you get to paying taxes or whatever, and you go, oh, no, I don't know what I'm doing. I don't know what money is my business money. I don't, what's the paycheck and what's my salary? And just, it's a nightmare. And then you finally pick up the pieces. So I'm so glad you named that as the place to start financially.
Yeah, I think a big reflection as well would be taking it one step at a time. And I'm sure that you probably provide this guidance as well. But one of the things that we've noticed for a lot of the clinicians that will be coming in and just getting started in their private practice is they feel like they have to do every single one of these things in a day on top of everything that you have to do clinically to get yourself set up for practice. And just give yourself the grace and time to knock out some of these items. And there's nothing from a financial perspective that cannot be undone. So there is no ultimate risk or ultimate fear. You are not going to be jailed for taking 10 days to set up your new business bank account before you first start setting up payments. These are all just great practices to put in place ahead of time and in the cadence that you're able to make that transition.
Yeah, I think that's such an important tip. Some of that is that people don't realize how many steps there are. And so then we think, oh, it's just going to be a few days. And then you get into it and it feels like a lot, but yeah, just one step at a time. I like that tip. Okay, well, we're going to keep plugging away because we got some good questions and I want to hit on them. So the next category of question, which actually we got a lot of questions about this, is all about write-offs. And maybe even before we get into some of the questions, can you just explain what write-offs are? Like, what does that term mean when people use it?
Yeah, a write-off is a term or a jargon that accountants use to describe a deduction or expense that is associated with your practice that you can, or that will be reducing your taxable income that you'll be presenting on your tax return at the end of the year. So an example of a write-off could be your liability insurance through CPH or the trust. It could be the fees that you're paying for Simple Practice software subscription. It could be credit card processing fees for using the payment processor through Stripe with Simple Practice. So these are all of the expenses that you're paying for, the operating expenses that you're paying for to maintain and operate your private practice.
Yes. Awesome. And write-offs are fun to learn about, even though it's tax. So you named it, you can kind of write it off. But what is the benefit of knowing what the write-offs are? Like, why not just skip it?
Yes. One of the main benefits of knowing what a write-off is in your private practice is you're going to get to the end of your first year in private practice, speaking specifically to this person that's having this experience for the first time, and you're going to realize that you have made a lot of money, and perhaps you haven't paid in a lot of money into taxes throughout the year. And it'll turn out that this taxable income that you do have might be quite a bit. And so your goal is to always find all of the expenses that you've paid for in your practice that might reduce that taxable liability for you as a sole proprietor, or maybe as an S corporation, whatever your business entity might be, to reduce the amount that you owe in taxes. And so that's why it's highly important throughout the year to keep track of all of these expenses. It's an opportunity to reduce your overall tax liability that you're responsible for paying.
So when you know what your write-offs are, you don't have to pay taxes in the same way on those write-offs. So basically you're saving money, or really you don't want to pay the government taxes you don't owe. And so if you keep track of the write-offs, it helps with that. Wonderful. So everyone's wondering about write-offs for this reason. Say, I don't want to pay any more taxes than I am supposed to. So let's hop into the question. This is a great question. So how can we calculate internet, home office, electricity bills as write-offs? And do you have any tips for that question?
Yes, this is a great question and a very common question. So for the indirect expenses specifically, and I will bucket the home office deduction, internet, phone, for these expenses that you are using that you might not be thinking are typically associated with your practice, you will calculate these on what is considered to be a pro rata or an allocated basis. And that is a fancy way of describing, you calculate it based on how much you're actually using it. And so in the case of internet and phone services specifically, let's assume that Dr. Fang is using her phone 50% of the time to work directly with her clients and directly in her practice. That would mean that she would look back at what the total phone bill is for the year and take 50% of that expense and use 50% of that as a deduction or a write-off. More realistically, that might be closer to 25% or 30% if it is an individual phone bill. But that is if you are a sole proprietor, you can write that off directly on your individual income tax return on your Schedule C. If you're an S Corp, that happens a little bit differently. You would provide a reimbursement to yourself through the business for the percentage that you're actually going about paying. And then specifically as it relates to the home office deduction, this one is a little bit more nuanced and complex. For the home office deduction, there are two approaches in the eyes of the IRS. There is the standard deduction and then also the simplified deduction that you can take. The simplified approach that you can take is taking $5 up to 300 square foot in your home office. And basically you calculate the size of your home office. And I know you're thinking like, oh, well, I live in a studio or I live in a 2-bedroom apartment. How do I go about calculating that square footage or that percentage that I would allocate to my home office? And it is confusing, but the recommendation would be getting a clear sense or understanding of what that square footage is. And then if you're using the simplified approach, you multiply that by $5 to calculate what the total write-off for the year is going to be. In the standard approach, you're taking into account things like the mortgage cost if you own the home, the mortgage cost, the mortgage interest, utilities, so things like electricity, gas, and water. And then you're taking a percentage based on that square footage and the total dollar value or total dollar amount rather paid to account for what that sort of write-off is going to be for yourself for the end of the year. And again, for a Schedule C filer or a sole proprietor, you would take this write-off on your individual income tax return. And if you're an S corporation, rather, you would be taking this as a reimbursement that you're paying yourself back out from the business.
Wow. There's
A lot
so
of
many
information.
there's so many layers to that, right? There's probably so many folks thinking, oh, I didn't realize I could write any of that off. And then this, like, how do you know what person, like, okay, I got my phone, I use it for me and I use it for my clients, maybe in the, so how do I keep track of what percentage that is? Or like, is there a form or do I write it down somewhere? Or is it just kind of, I'm guesstimating, I think it's 25%, or, how do people keep track of that?
Yeah, that's a great question specifically. So how do you go about calculating the phone and internet deduction or write-off? And a recommendation here is I would not describe anything ever as a guesstimate per se, but specifically as
write that word on your tax form.
Yeah, exactly. Don't use that word on the tax form specifically. But specifically as it relates to internet and phone, this is an estimate, a reasonable estimate that you're making, a determination that you're making. And so, let's imagine, you have internet for your household and it's just yourself. 8 hours a day, you're using it for yourself personally, and then maybe the other 8 hours, or for yourself as a business owner, and maybe the other 8 hours you're using it to, watch Emily in Paris and browse the latest lifestyle blogs or whatever you might be doing. It's just, you have to make a reasonable determination or a reasonable estimate, and really think about, a good way to approach it is really thinking about what your day looks like when you are using your phone or using your internet. And if you do feel uncomfortable making that estimation on your own, somebody like Heard could help you walk through that, or maybe talking to your local tax accountant or professional that you might be working with.
Absolutely. Well, that's really helpful to know. I think probably most folks end up doing like, not at all, I didn't even know I could write it off, or it's too scary, I'm not going to do it. Or the other extreme of like, this whole apartment is a tax write-off 100%, like, and just inflate things. So finding that reasonable estimate, which it is complicated. So I love that you're available to kind of help, that Heard is available to help kind of hone that in a bit, because it is a lot to figure out. Okay, great tip. So more questions about write-offs. Can we write off business expenses made using our personal accounts? So if somebody maybe doesn't have their business account yet, and now they kind of did their oopsies and now they got it, can they go back and write off those expenses that they already made on that personal account?
Yes. So very common question. So there are a lot of two different lenses through which I will approach answering the question as to, if I make an expense out of my personal account, can I write that off? And so if you are just starting in private practice, you're inevitably going to have a lot of expenses that you're paying before you move into private practice. And that likely means before you actually set up your business, you're probably going to get your malpractice insurance. You're probably going to be, filing for incorporation. You'll have fees, registration fees that you're paying to the state. You're going to have other sort of business expenses that you're paying for, whether it's furnishing a beautiful office like Dr. Marie Fang's in the background, or, setting up your space so you can actually operate and support professionals. And so all of these startup costs you're able to write off. And a recommendation here, because at the point that you probably don't have a business bank account, you probably haven't set up any sort of accounting software, or probably haven't, set up something like QuickBooks or Waves, or using a service like Heard. I would just recommend keeping a spreadsheet of all of those transactions before you've started in private practice, and just keeping all of those in place. And then you can always add those back to any accounting software that you might use. You can provide those to any accountant that you might be working with, and they'll be able to, appropriately help you understand, hey, we can take advantage of these specific startup costs, or, hey, maybe this is something that we might not be able to associate with the given tax year or with your business. As it relates to a formalized business entity, I do want to just add a disclaimer here that I do think it's incredibly important to pay through your business account, but that oopsies do sometimes happen as it relates to personal or business expenses coming out of your personal account. Maybe you're at Target and you need office expenses and you have to pay on your personal credit card because you forgot your business debit card or your business credit card. And so, yes, it is okay if it happens, but if you do have a formalized business entity, it's important that you're protecting what they call the corporate veil, which is the separation between your personal accounts and your business accounts. because when there is that crossover between personal and business, and again, only important if you have a separate business entity, technically your personal assets are being combined with your business assets. So in the case of some form of litigation, God forbid that would take place, you would not want to have a crossover of business and personal expenses. But of course, this is something within reason. So this is not to instill the fear of God as it relates to managing your expenses between personal and business.
If I'm hearing correctly, you're saying the rules are a little bit different if you're a sole proprietor,
Yes.
which is like default entity,
Yeah.
or if you're some type of incorporated business. And if you're a sole proprietor, it's kind of like, even if you never have a separate business account, as long as you keep track, then you're good to go, and you can give that to your accountant for tax season. And if you are incorporated, you have a S Corp or something like that, then you absolutely want to do everything in your reasonable power to keep those expenses separate in the business account. And if you do have the oopsies moment, you're not like screwed over forever, but you want to, there's some kind of extra rules of how to be mindful around that.
Yes, absolutely.
Let's see this. I think we're kind of starting to touch on the next category. So maybe we can hop into it, because I know there's lots of questions about this and I don't know these answers. So we need your help. And that's just the major question of like, okay, so should I be a sole proprietor? Should I be an S Corp? Should my business, there's C Corp, LLC. And then if you already mentioned too, depending on what state you live in, where there's different rules about what you can file as. So maybe we can tackle this category together and help clear the air for a lot of people. And one question that was asked often was, when should therapists consider electing S corporation for tax? And maybe as I'm reading, I'm thinking, can you even just explain what all these letters mean so that we know what we're talking about?
Yes. So let me kind of just walk through briefly the different types of business entities for being a therapist. And so I'll start with a sole proprietorship, or being a sole proprietor. So as a therapist, you are a sole proprietor. Let's say you're working part-time in community mental health or at an agency, or you've just started working in a group practice and you transition from a W-2. If you have any income that is independent from a W-2, you are immediately considered, in the eyes of an IRS, a sole proprietor. And what that means is, as a sole proprietor, as opposed to just filling out or associating a W-2 or normal wages on your individual tax return, you now have what's called a Schedule C, or a business profit and loss that's associated with your tax return that you're filing at year end. And so immediately when you start having independent income, the way that you have to approach filing taxes just looks a little bit different. And so that's one thing to take into consideration. A couple of other examples of this that might be helpful is, if you have a full-time W-2 job, maybe you're teaching, and then on the side, you start taking new clients from a new member network like Lyra Health or Modern Health, or you're starting to see clients on the side through Advocate or Reflect or any of these networks in California. And now there's some nationally as well. You will receive what is called a 1099 from all of these networks. And what that means is that you are set up as an independent contractor, and independent contractors are treated as a sole proprietor unless they form a separate business entity.
Got it. So if I just put a sign outside and say, Marie is accepting new clients, I'm a therapist, and they start paying me for the services, I am a sole proprietor if I've done nothing else. And I have a special form that I need to fill out when I do taxes. There's more to starting a private practice than putting a sign out, but just from a taxes perspective, there's just a separate form, but it's filed together with my usual taxes. And the same goes for a 1099 as well. If you don't form any separate entity, you're going to be a sole proprietor.
Exactly. As a sole proprietor, you can set up a separate EIN and can set up a doing business as, so you can set up a separate tax ID or a tax entity, but you don't necessarily need to do this. One thing I would recommend, though, when you do become a sole proprietor is registering your business in the local county or city that you are in, just to let them know that you are operating as a business owner in that specific area. The other unfortunate thing about being a sole proprietor is that as a sole proprietor, you are responsible for paying self-employment tax, and self-employment tax amounts to the Social Security, Medicare, and unemployment tax that you would have otherwise been paying if you were a W-2 employee, or rather that your employer would have been paying half of when you were a W-2 employee. But as a sole proprietor, in the state of California, as an example for Dr. Marie Fang, if she's a sole proprietor and she sets up a new business, she's paying her federal income tax, her state income tax, and then paying another 15.3% on top of that in self-employment tax. And so oftentimes it is a little bit surprising when you come out into private practice and you recognize just how much you're having to pay into taxes throughout the year.
Yeah, that's a good point. Probably most folks don't realize that if they're working for a conventional employer, that the employer is also paying part of their taxes. So now when you work for yourself as a sole proprietor, now you're paying that too, plus whatever you were paying. It's a lot. Is there anything that's worth noting about kind of what types of entities are maybe more common amongst therapists, just so that folks can know kind of the differences between each of these?
Yeah, absolutely. So assuming that you make the determination to form a new business entity, depending on the state that you're in, you will likely form, and for therapists specifically, you'll likely form an LLC, a PLLC, or a professional corporation. And again, if you're looking to DIY this and tackle this yourself, talk to folks that are in your listservs, your networks, and your communities to get a sense and an understanding of how they've approached this, or if they've worked with lawyers specifically. But in the case of setting up a new formalized business entity, I'd always recommend setting up at least an initial consultation with a professional just to get a good understanding there. But people form a new business entity because, one, it enables you to separate your business and your personal self, which is an awesome thing as a small business owner. Again, it enables you to separate your personal address from your business address. It enables you to separate your personal finances from your business finances and open up separate bank accounts. And with things like LLCs and PLLCs and professional corporations, it also enables you to have a separate layer of protection as well over the assets that are associated with your business versus your personal finances. Again, I would recommend talking to a lawyer about this specifically because there are some nuances as it relates to licensed professionals, which is why you get malpractice insurance or professional liability insurance for your practice. But a big thing that happens when you set up a separate business entity is that you're then able to make the determination to be taxed as an S Corp if that is a decision that is appropriate for where you're at in your practice journey. And an S corporation, which is inevitably the sexiest topic in private practice accounting that therapists love to ask us about, and that we support many therapists with through the transition process. What an S Corp does is it enables you to separate yourself as the owner of the business versus the employee of the business. So as a sole proprietor, remember those self-employment taxes that you're having to pay. When you set up an S corporation, you're able to pay yourself what is considered to be a reasonable salary, which is oftentimes about 50% of the total business profit that you are making in the case that you are a sole proprietor separately. And what that does is it reduces the amount that you're paying in payroll taxes, and the additional income that you have on top of that, you then take in the form of a tax-free distribution. But what that means is you have distribution that you're taking from your business as the owner of the business on top of the salary that you've already paid yourself out. You will pay federal and state taxes on that, but you won't pay self-employment taxes on that income. And so the savings that comes with becoming an S Corp is because you're reducing the amount that you're paying in self-employment tax by treating yourself as an employee and an owner of the business and paying yourself a reasonable salary within the actual S corporation.
Makes sense. So at some point, in addition to the benefits that of kind of protecting yourself from your business assets, of like somebody sues you or something like that, they can sue your business then if you're, say, an S Corp or an LLC, rather than suing, Marie and taking my house and all those things. Which therapists freak out about, yes. Understandably. There's also financial benefits or potential financial benefits that are worth considering. But then as you say that, it kind of raises the question that I think leads us maybe into the first question we should hop into in this category is, when should therapists consider electing being an S Corp for taxes? And I mean, Why wouldn't everyone just be an S Corp then, for example, or is there some point where it makes sense?
Yeah, this is a great question. And it definitely depends. The classic accounting answer is it depends. And we would like to see all of the facts and circumstances here. But broadly, I can say it really starts to make a lot of sense when you have about $80,000 of business profit. Of course, you need to think through all of the personal facts and circumstances that relate to who you are as a full tax individual. But as it relates to you as a private practice owner, typically that crossover point where the benefits of becoming an S Corp and setting up payroll and managing all of these additional tax filings outweigh the cons of remaining a sole proprietorship at about $80,000 in business profit. And that's typically where you're going to start seeing anywhere from $3,500 to $5,000 and upwards in tax savings, to where it then makes sense to explore. Because one thing to note is that when you do become an S corporation, there is an administrative burden on your side. There's a change in how you operate as a business. There's a change in the function of the work that you have to perform on the accounting side and the legal side of your private practice. And there are additional costs like payroll and state fees. And some states, specifically like New York, have additional taxes. New York City has additional taxes that they charge for folks that have structured themselves as S Corps. And so in certain locations, it makes sense to identify, are there specific rules or laws in this given state, to where that $80,000 that made sense in California or Oregon might not make sense in the state of New York. And so it's always important to gather all the facts and circumstances, but a broad sweeping definition would be right around $80,000 in business profit, where that really makes sense.
Gotcha. So I think I heard quite clearly, we don't want folks to hear this and say, okay, I'm at 79,000. Okay, I crossed over. Now I'm at 81,000. Time to file an S Corp as an S Corp. But maybe if somebody is like just starting out and they're planning on seeing 2-3 clients a week, kind of on the side of their job, maybe that's probably not the person who should be like scurrying to get to file as an S Corp. And as always, like, consult with an accounting professional, and because it can vary just depending on situation and state and all of these things. But I think that's a really helpful benchmark to just say, okay, if 80,000 is like way far away, maybe I don't need to be too concerned about it. Or if you're way past 80,000 and you're still a sole proprietor, now's a good time to investigate.
It is often challenging to make a determination as to when it's appropriate or when it actually makes sense to make that transition. But we do have a calculator that is often helpful in thinking through the high level assumptions around how much money you're making, what expenses look like for you, and what a reasonable salary might look like, to help you get a sense of, with where you're at in private practice right now, does it make sense for you to consider making that transition? And that could be a high level starting point for you to think through, should I go have a conversation with an accountant or a lawyer to make this change? And so we will certainly leave that behind for all of the folks that have listened to this.
Amazing. Okay. So if people want to dive in a little bit more in detail beyond just that 80,000 a year benchmark, you've offered this calculator that folks can kind of enter some information and find out more details. That's really wonderful. So I've linked to that in the description box below if folks are curious, which I'm sure that's going to get clicked on a lot because everyone asks about this. So that's wonderful. So let's say I've clicked on your calculator, I've filled things out, and you're telling me it's probably a good idea to file as an S Corp. And maybe I've even checked in with my accountant. Yes, it's time. Now, what do we do? What do we do next?
Yes, the many steps of becoming an S Corp. So there are 2 different pathways. So if you are already a formalized business entity, so if you have an LLC or a PLLC or a professional corporation or a C Corp, you can file what is called the Form 2553, which is the S election by a small business. So that is the form that you file with the IRS to let them know that is how you would like to be taxed. Because again, an S Corp is a type of tax entity. It is not a type of business entity. And so that is one pathway. If you already have those set up, there will be no need to change your EIN and go through those, arduous steps and processes. But if you are going from a sole proprietor to becoming an S Corp, in order to become an S Corp, you need to first form a new business entity. And so I can use California as an example for this. In the state of California, if you want to become an S Corp, you are a licensed provider. You will first need to form a professional corporation in the state of California. And then after you form that professional corporation, you would register with the IRS to get a new EIN for that new business that you have set up. And then after that, you would file a statement of information with the Secretary of State, which is simply a way of you telling the Secretary of State, hey, I'm operating, I'm in business, I'm set up, and I'm ready to rock. And then at that point, once you'd file that statement of information, you can go about filing the Form 2553 or setting up a new S corporation. And then because you are making all of these changes in your business and setting up a new business entity, this does mean you will need to do things like setting up payroll. You'll need to change your consent forms to include the new name of your business entity. And so we'll leave a leave behind as well of some of those different items. And we have a great blog post that we can link out to as well that talks through each of these steps, but would recommend taking a second to get a good understanding of all of those steps before you just jump right in and make that transition.
Perfect. That's so helpful that you've already outlined all the steps too, and that you're offering that as well. I feel like I'm just going to link to all the things in the description for this video. Super helpful. And this feels similar to something we talked about before of just, it could feel overwhelming to say, you see the list of stuff to do to become an S Corp. But if you just see it maybe as one step at a time, okay, today I'm just going to chip away at this step and it'll be worth it whenever it kind of comes to fruition in the end. And then it feels more manageable.
To add to that specifically, you throughout this process, whether you're DIYing it or working with a professional, you're going to be reliant on state organizations and also the IRS. And it often feels out of control from a timeline perspective as to when certain things are going to be achieved. And so just holding patience as you're working through this process is incredibly important because each state has different registration timelines during different times of the year. It takes longer than other times of the year. And specifically for something like the S election or forming or filing the Form 2553 to become an S Corp, it often takes in the magnitude of months before you actually hear back from the IRS to know that you are going to be operating as an S Corp.
Sounds like a process.
So fun.
Super fun, but yeah, clearly worth it in the end if it's applicable, just to be saving potentially like thousands of dollars a year. So it is worth kind of plugging away at it. And I'm so glad you answered some of the most burning questions about this. I think you kind of touched on this next question a little bit, but maybe we'll ask it head on. But somebody asked, are there pros and cons between an S Corp versus an LLC? And I think there's maybe more nuance to it than just that. I wonder if you can address that.
Mm-hmm. Yeah. So for an S Corp versus an LLC, so speaking from a tax lens specifically, so an LLC, they are treated as a disregarded entity, which is a very sad name for a business entity. But what that means is that you file as a sole proprietor. And so you have a Schedule C, like a sole proprietor, on your individual income tax return, your Form 1040 that you're going to be filing. And so you're going to be paying self-employment tax as an LLC. But one of the benefits of an LLC, of course, is that you have the liability protection and that you are separating your business and personal assets. From a tax perspective, the S corporation specifically is separating yourself as, again, the owner and the employee of the business. And so what that means from a tax perspective is that you'll have a Form 1120-S, which is a separate tax return that you'll need to file. And so that's one of the costs to take into consideration is that when you are filing a separate business tax return, it's often going to be, a magnitude of expense higher than just filing an individual tax return. And then with that information for your S corporation, you report back that business profit on your individual tax return on top of the W-2s or any other sorts of deductions or credits that you're taking advantage of on your individual tax return. And so a little bit different from a process perspective and a number of other steps that you need to take into consideration if you're an S Corp.
As I'm hearing you talk, clearly you know exactly what you're talking about. And as I hear it, I'm thinking, oh, there's so much information. And if I was trying to figure this out for myself, I might just feel like I just need a professional to tell me what to do. So, and of course it depends. So I think this is just kind of reconfirmation for me too, as you're sharing. I think, yeah, no matter where somebody is, especially if you're getting into the weeds of like LLC and S Corp, like it's a really good time to consult with a professional if you haven't yet, to get some of those questions answered for you rather than getting it. I think there's a lot of opportunity to get lost in the weeds.
Yes, highly recommend, especially when you get into the business of creating a new business entity and having different types of business tax returns, working directly with a professional. I think as a sole proprietor with a single 1099 and a few business expenses, it's easy to DIY a tax return, and you can get away with using something like TurboTax. But when you start operating in a new formal business structure where payroll is involved and a number of different nuances are involved, I typically recommend talking to a professional, whether it's Heard or your local professional.
Okay, Andrew, this is so helpful. We still have more questions because there's so many things about accounting and taxes. So I'd love to just kind of keep going through as many questions as we can. And the next category of questions was just all about bookkeepers and accountants, which we're just talking about how valuable that is. So one question that came up in this category is, what are the main things I need to know or ask a CPA when starting a private practice? Yeah, because it's like I found one, but now what?
Yeah, that's a really great question. What are some of the things that I need to know when I'm going to speak to a CPA or an accountant? I think broadly, the best way to start by responding to this question is just helping folks understand, like there is a lot of different types of licensures within the practice of being a mental health professional, whether it's a clinical psychologist or a marriage and family therapist or a clinical social worker. In the world of accounting, there are lots of different types of people as well. And so a bookkeeper, there is a bookkeeper, there are financial accountants, there are tax accountants, there are tax CPAs, and then there are also lawyers as well. And so I think one of the overwhelming things that we've seen when folks are trying to solve a specific problem is they assume, hey, if I go talk to my local CPA, he's going to be able to, or they are going to be able to help me with this specific problem. And maybe in this specific instance, it's talking through workers' compensation for payroll as it relates to my practice. And so one of the things that I'm hopefully able to do here is kind of talk through each of these individually. And so a bookkeeper, this is somebody that's going to probably use software like QuickBooks or maybe software like Heard's. They're going to categorize your transactions each month. And what that means is they will take all of the information associated with your business bank accounts and categorize that into appropriate business deductions or business write-offs that you'll be able to take advantage of at year end. They'll reconcile that, which means they will match the information that is in the accounting software back to your bank statements to make sure that everything is complete and accurate in the way it should be. And then they'll provide you reports on a monthly basis. And they may be able to help you think through things like expense categorization. They may be able to help you think through things like, how can I reduce the overhead in my practice? What are some different things that I can look at? A financial accountant, this is somebody a lot like the work that I was doing at PwC specifically. You are not only gathering that financial information and looking at that financial information, but you're using that financial information to make decisions. And so you are able to set budgets, you're able to set forecasts, you are able to set plans for the year ahead. And so getting a sense of if your bookkeeper is able to help you think through things like budgeting and forecasting and planning is oftentimes a good question to ask, or if you might need to separately go to a CPA who is more skilled at being able to walk through that type of things or walk through that type of information and has in fact been trained in doing that sort of work. A CPA, of course, this is a type of licensure or credential that you have. A CPA, they can be two totally different things. They can be a financial CPA and they can be a tax CPA. And those two different people are two very different people with two very different skill sets and what they're able to support on. So if you're going to look for a new bookkeeper or a CPA, I would recommend asking them, what are the types of services that you normally provide? Do you provide budget services? Do you help me forecast? Are you just doing the categorizations and the reconciliations? Can you also help with my individual income tax returns? Are you going to be able to support me with something like payroll if I become an S corporation? And so getting a sense of all of the individual activities that might fall into your job description as a small business owner, if you were to own each of those different things, and taking those activities to them and saying, hey, which one of these can I really realistically offload to you and will you support with? And which are the things that I personally still need to maintain? And so a lot of words, but hopefully that is helpful context setting there.
That is so helpful and clarifying that it's not just, I need help with my finances. I found a CPA, the first person who popped up in a Google search, and they're going to just do all the things finance for me. You might have different people for different tasks, or if you want somebody to do a lot of the tasks, you need to be specific and asking what sorts of things they're available to do or what you need them to do and see if they can do it. That's very helpful information. Now we're going to get into some of the tough questions that I think most people really like to avoid. I prefer to avoid. And we're going to talk about quarterly and yearly taxes, and especially around quarterly taxes. I think a lot of people have questions about this. So one question that came up around quarterly taxes is, for estimated quarterly taxes, what do I need to know or do? Like, what do I do? What even are quarterly taxes, and what are we supposed to do with them?
This is a very important topic, and oftentimes one of the main things that we spend time in the beginning helping folks with. And so quarterly taxes are your payment for the individual income tax liability that you have as an individual taxpayer. And so as a 1099 or a sole proprietor or an LLC or an S corporation, you have an outstanding tax liability for the money that you earn in your practice that you're responsible for covering. And in the eyes of the IRS, if you are going to have a tax liability associated with your practice that supersedes $1,000 for the course of the year, the guidance is fairly clear that you should be responsible for paying into these taxes throughout the year. If you choose to not pay into your quarterly taxes throughout the year, there are penalties and fees that are associated with that decision in the magnitude of 0.5% all the way up to 25%, again, assessed against your individual income tax liability at the end of the year. If you choose to make that decision. Again, every accountant is different in how they approach their strategy. So if you hear this and say, well, my accountant told me that I don't need to pay quarterly taxes, I would have a conversation with your accountant to just understand why that decision was made. And there may be a totally reasonable decision as to why they made that. I just don't want to alarm for folks that might have heard information separately. But the IRS guidance is fairly clear that you should be responsible for paying in quarterly taxes throughout the year.
Gotcha. And okay, it's time for the quarterly taxes. Like, where do I go to go pay them?
Yes. And how much do I have to pay, and what do I do? So depending on the state that you live in. And so of course, there are certain states that don't have state income tax. And so in those specific states, you are not responsible for paying state income tax. If you're an S corporation, there may be a different type of tax associated with your practice. And so I would recommend getting a sense of what are the taxes that I do need to pay. But as an individual taxpayer, for that business profit that is either earned through your S corporation, taken in the form of distributions, or through your sole proprietorship that has been untaxed throughout the year, you are responsible for paying into the IRS in the state a certain percentage. And so for this, there are some quarterly tax calculators online if you do want to DIY it. But this is also a good one-time consultation or a good annual conversation with the tax accountant that you might be working with. Or if you're working with somebody like Heard, will provide you those estimates on a quarterly basis. But having that conversation up front before you make that decision as to how much you might need to set aside is really important. And the specific thing to highlight here is that you're probably going to move into private practice, or you've been into private practice for a period of time, and you're learning that you have to pay quarterly tax estimates. But what is included in these quarterly tax estimates is you as a whole tax individual, not just your individual private practice. And so what that means is that if you have a partner that is a high earner or if you have dependents in your family, or if you're a head of household, all of the individual circumstances about you as a tax individual that influence the tax rate that you pay taxes at the end of the year on your individual income tax return influence how much you have to pay at the federal and the state level. So always recommend at least having that one-time consultation just to get a good understanding of what that might look like, because you don't want to underpay or assume that you owe less when really, oh, my partner earns $250,000 a year, so our tax bracket is actually 30% and not 15%. So always a good thing to check in and get a sense of what the whole picture looks like.
So again, the value of checking with an expert, like this is not something to be messed with, and you don't want to find out later that you didn't pay enough, because there can be penalties and all that too. Well, Andrew, I think we have time for just one more question, even though there's so many more that we could get to. But a lot of folks ask questions about providing therapy in more than one jurisdiction, more than one state. So here's an example. Somebody says, where do I start when I live in one state and provide therapy in another? Well, I have no idea.
Yes, this is a scary thing, and particularly an interesting topic for us tax accountants, because there is constantly changing legislation on what causes an individual taxpayer to owe tax in an individual state. Nexus is the term that a tax accountant might use, or the term that the state would use to determine if you do owe taxes in the state. So if you are a therapist who is operating in one state, and let's say living in one state and operating in 2 to 3 separate states, in all likelihood, you are going to be responsible for paying taxes in that individual state if you have triggered the events that would cause taxation in that individual state. And so this is a fairly complex tax issue to dive into. And one of the reasons that I wanted to address this question is that if you are operating out of multiple states, I would highly recommend meeting with a tax professional to get an understanding of what the specific nexus laws are, or what events happening in that state, or what amount of money in that individual state do I need to be earning to which I might owe taxes in that individual state. In the case that you do owe taxes in that individual state, you would be filing an alien return or an out-of-state return for that individual state, and then likely be credited back an amount to the state that you're operating out of or living in. But this is a complex topic with a lot of nuance on a state-by-state basis. So I would always recommend chatting with someone as it relates to cross-state licensure and telehealth operating across state lines.
Absolutely. Well, I'm hearing a theme, right? There's certain things that are just not to be DIY'd, or not to, there's no blanket statement really that can just answer that question. And so it really helps to have a professional, and Heard is also, one of the many and one of the more wonderful options available for therapists specifically. And so I wondered if you could say a little bit about Heard and what you do and what you offer for therapists.
Heard is an all-in-one accounting solution that combines software and real people to handle things like entity formation, payroll, bookkeeping, accounting, and income tax services. And so we support specifically mental health professionals, so independent clinicians with their practices, get a handle on their finances, help them get organized, and really help stay abreast of the changing tax laws that are constantly in flux, to help make them more successful business owners and focus on the thing that matters most, which is serving the clients. So
that's wonderful. And basically I hear that as all the stuff that we just talked about, which can sometimes be scary and overwhelming. Heard covers the bases on all of those. So if anyone's wanting help and support from a professional, Heard can cover basically all of the different kinds of categories that we've just talked about. And I really love that Heard specifically works with mental health professionals. So you have a perspective of what our unique needs are. Wonderful. And I've linked to Heard's website below as well if anyone wants to learn more. But I think this is our opportunity to come to a close. I know we crammed as many questions as we could in the time we had, and even went overtime. So thank you, Andrew, so much for your time and your expertise. And thank you for what you're offering through Heard Bookkeeping and Tax as well. And I've linked it below again to where folks can find out more about Heard. Anything else you'd like to add, Andrew, before we close?
No, I just wanted to say I'm incredibly grateful for the opportunity to come and nerd out on all things accounting. I know a lot of this information will present as overwhelming, and it takes a lot of time to digest a lot of these new terms. I have a tendency to use accounting jargon a lot, but as we've alluded to throughout the presentation, regardless of whether you DIY or work with an accounting professional, I would encourage you as a business owner to educate yourself on these different financial topics and areas of your practice so you can make informed decisions, whether you are tackling them by yourself or as a business owner, but also acknowledge that you are not trained to be an accountant. So these things do take time, but it is an awesome opportunity to educate yourself more as a small business owner.
Absolutely. Well, thank you so much, Andrew. We really appreciate your time and all of your wisdom as well. And I'm just so grateful.
What an amazing interview with Andrew Riesen. Thank you so much for offering your time. In fact, we went over time from what we were scheduled for this interview because there was just so much information to pack in there. I didn't even get to all of my questions. So we did mention a number of items that would be linked below. So if there was anything that you wanted to learn more about, it's probably addressed down in the description box. So I encourage you to check that out if you would like more information. But whether you had no prior knowledge about accounting and taxes in private practice, or if you've been around private practice for a bit, I am sure you gleaned a lot of new information from this interview. Thank you again to Andrew Riesen from Heard Bookkeeping and Tax for offering your time and your wisdom in this video. Let me know in the comments what you found most helpful from this video and what questions maybe you still have for the future. And until next time, from one therapist to another, I wish you well.